Hi, this is Matt Amberson, the principal of ORATS, and today I want to use the Earn Move Report and Scanner to make some option trades in this busy earnings season. First of all, when we open up the Earn Move Report, we'll notice firstly that we're showing the number of companies reporting on the certain dates, and we'll see that, let's see here, 1,100 are reporting over the next 7 business days. It's about a third of all the stocks out there. We do a thing called the average effect, and that's how much more than usual stocks should move on their earnings day. So 200% means that stock should move about 2 times what they normally move. So we could see that on these days, 29th looks like a busy day. All these looks like pretty busy days. So let's go ahead and try to identify a stock that we think may move a lot during earnings. I like to have a minimum option volume. These are all Excel-based drop-down auto filter that you could set. So we'll set a custom for option volume over the last 20 days greater than 400. And then we'll go over and do a special option return calculation that ORATS does, and we'll sort descending, and now I'll go ahead and explain what this means. We backtest the earnings environment that the stocks are currently in, and we look at the call implied volatility versus put implied volatility. Those strikes have moved in relation to each other. We look at how much the implied volatility itself has moved and how over or undervalued a stock is compared to the ORATS forecast. And then we'll term that as the environment the stock is in right now. And the stocks would have to be outside of a 1 standard deviation in order for that to be flagged. So SANM, the slope is up and it's undervalued, and when that has happened in the past, 5 of 6 times you've made money at earnings time. So we're going to go ahead, and the average is 32% that you've made at that time. So we're going to consider this a good buy. And now what we'll do is we'll look at the ORATS Scanner in order to find some options in order to trade. So we'll log in to the ORATS Scanner, and we'll set up, from the default, we'll set up a custom list, and we'll just type in SANM. And we want to be buying options. We want to see 4 of the top options. The stock price, this doesn't really matter. The option price doesn't matter. Days to expiration 0 to 120. The absolute delta will do 20 to 60. And now that we use absolute, so we could get the calls and puts. We'll take out the yield pickup. That has more to do with option rights, as does the call away. And we'll add an option criteria here. We'll add the ORATS forecasted edge, and if you mouse over the I, it says it's the ORATS theoretical forecast value divided by the option or spread price. So we'll click on the hyperlink, add criteria. Since we're buying, we want the highest relation of the theoretical value to what's in the market. We'll turn that on, and we'll go ahead and do a scan and see what comes up for SANM. Well, it wants us to buy the May 20 calls. The stock price is 1903. The option price is approximately 0.73. 26 days to expiration. The delta is 40. The forecast divided by the option price is 1.53, so that looks like a high one. Again, just to briefly go over what we've done, we have used the Earn Move special report that you could get emailed to you to identify and sort on the highest option return for stocks with a certain amount of volume. We were able to put how many days to earnings. We could put 0 for that, and these are the stocks that are coming up with earnings on 4/26 after the close, as we see here. So hope this has been helpful. Thanks for your interest in ORATS, and my email is matt@orats.com. Thanks.